The future of India-China relations. Investment trends to watch. What happens when two of the world's fastest-growing economies, India and China, stand at a crossroads between competition and cooperation? The answer could redefine global trade, supply chains, and investment flows for decades to come. A new chapter in Asia's economic power play. The relationship between India and China has always been complex, a mix of rivalry, interdependence, and strategic balancing. While border tensions and political mistrust occasionally dominate headlines, a quieter story unfolds in the background: the growing economic linkages that neither side can afford to ignore. Both nations are economic giants. China is the world's manufacturing powerhouse, and India is the fastest-growing major economy. Together, they account for nearly 35% of the global population and an ever-increasing share of global GDP. As the world economy shifts toward Asia, the way these two countries navigate their economic future could influence everything from trade routes to investment patterns worldwide. 1. Shifting trade dynamics. In 2024, bilateral trade between India and China crossed $135 billion, despite ongoing geopolitical challenges. India relies heavily on Chinese imports, particularly in electronics, machinery, and pharmaceuticals, while China increasingly sees India as a growing consumer market. Yet, India's push for Atmanirbhar Bharat, self-reliant India, is gradually reshaping these dynamics. The country is encouraging local manufacturing and seeking alternative supply chains, especially through partnerships with Japan, South Korea, and the U.S. This trend doesn't mean isolation from China. It means strategic diversification. 2. Investment flows, restrained but resilient. After India's restrictions on Chinese FDI in 2020, direct investments from Chinese firms slowed down. However, indirect investment via Singapore, Hong Kong, and other routes has continued. Sectors like renewable energy, fintech, and consumer electronics remain quietly influenced by Chinese capital or technology. Meanwhile, Indian startups are catching global attention, and venture capitalists, even those with Chinese backing, are finding new ways to participate in India's booming digital economy. 3. Technology and green transition. Both countries are racing toward dominance in AI, electric vehicles, and clean energy. China currently leads in EV manufacturing and solar energy technology, while India is expanding its green energy infrastructure with massive investments in solar and wind power. Collaborations in climate technology could become a neutral ground for cooperation, benefiting both economies and reducing global carbon footprints. 4. The role of global geopolitics. The U.S. China rivalry and shifting global alliances play a major role in shaping India-China relations. India's growing ties with the Quad, U.S., Japan, Australia, signal strategic alignment against Chinese influence. Yet India avoids full confrontation, preferring an issue-based, pragmatic approach. China, on the other hand, sees economic pragmatism as key, continuing trade even while managing political friction. In short, economic logic continues to overpower political tension, for now. 5. What investors should watch. Global investors are increasingly tracking India's supply chain reforms and manufacturing incentives, China's economic recovery amid domestic slowdown, potential regional cooperation under BRICS and Shanghai Cooperation Organization, SCO. The next decade may not see India and China as allies, but strategic coexistence is likely, where competition drives innovation and interdependence prevents isolation. Conclusion. The future of India-China relations lies not in conflict, but in economic necessity. As both nations navigate their internal challenges and external pressures, their investment patterns will shape the future of global trade, from energy security to digital innovation. Whether rivals or reluctant partners, India and China will remain the twin engines of Asia's economic destiny.